Joined by Bloomberg Television as well. You're listening to Bloomberg Radio. You're watching us on Bloomberg Television. I'm Corey Johnson here. And Bipul Sinha joins us right now from Lightspeed Ventures. Glad to have you. I've got to ask you about this sort of changing valuation of the unicorns. It's been a discussion a lot of people have been having. But Emily Chang and I were just talking on radio with Carol Masser about this notion that, that the psychology has changed. And VCs are demanding things different of their companies. That they spend more slowly, that they be thoughtful about, that they make a profit on the things they sell, God forbid. Have you changed the messaging to the companies that you guys are invested in?
So we have always told our companies to be careful with spending money. What has happened in the last couple of years was that the growth funds were very generous with respect to valuation and fundraising. As a result, the companies were deciding to not go public and spend a lot of money and grow fast without caring about gross margin or profitability. Now things are coming more back to normal, where companies are focused on making money.
You see, without caring about gross margin, literally like negative gross margins, companies selling things for less money that costs to make them?
It's not negative gross margin, but instead of, they could have gotten like 70% gross margin, they sold it for 30% gross margin, because in a rush to capture the market, they didn't worry about money getting out of the door from the shop.
Bipul, let me ask you, though, about the current environment. I mean, Corey and I have talked with people about just kind of things, the environment changing a little bit, real estate in San Francisco, things slowing down, maybe even, a possible recession kind of in the San Francisco area. Has any of the sentiment, when it comes certainly to startups, changed at all?
So definitely when companies start to slow down on investments and slow down on the growth, they hire fewer people, the rate of growth slows down. As a result, now fewer people are in the job, more people are in the job market, and demand for housing and other things start to decline. But I don't feel that there is a significant slowdown. What we are seeing is that the companies with the right fundamental and real value creation are still growing very, very rapidly, because the financial market upheaval has not touched the main street. We as a business at Rubrik, we are growing very, very rapidly because we are selling to retailers, we are selling to financial institutions where the demand is still very strong. So I think what is happening is companies with not so strong business model and ability to make money have slowed down. The companies where the fundamentals are strong, they are still growing very rapidly.
You know what isn't growing rapidly? The number of IPOs. So we've seen this just dearth of IPOs. We're going to start to get bank earnings next week, and I'm sure we're going to hear a lot more of this conversation. Has the IPO market fundamentally changed? These unicorn companies that get a lot of funding, they can stay private longer. Are we going to see the $500 million, the $200 million IPOs come back, or do you think that's just a thing of the past?
I feel that the
market, venture-backed technology companies. Right?
Absolutely. I feel that the market is more sane now. There was a kind of undercurrent in Silicon Valley in the last, I would say, 2 years, where people thought that going public is more burdensome, you have more regulatory compliance issues, stay private, raise money at a higher valuation. But what people are now realizing, that going public has some fundamental benefits, because when you have regulatory compliance issues, you are doing the right things in the company.
Right.
You are responsible. You are answerable to the investors, and you are kind of focusing on the right issues.
And that's psychological, you think?
That psychological change has happened. Now the Silicon Valley is back to more normal situation, where they want to grow company fast and they want to take it public.
But we're not seeing IPOs.
So the reason is we are not seeing IPO is that because of the commodity market and China, there has been a slowdown in the public market, and even good companies are waiting for market to stabilize. And what we are seeing in the last 30 days, NASDAQ is up about 3%. So things are coming back to normal. It's cyclical, but I think Silicon Valley is back into this mode that we want to build big companies and take them public.
Bipul, are the companies, startup companies, kind of staying private longer, and is that a good thing, making sounder companies ultimately when they do decide to go public, if they decide to go public?
So it has been always a thing where founders want to stay a little bit private a little bit longer, because they can invest in product and technology and go into the public market with more robust offering. But now people are realizing that technology companies going public is a good thing, because when investors look at a private company, they still feel that these companies are investing for growth and they are more forgiving. Look at Amazon. The public market investor gave them many, many years to grow.
I mean, Amazon and Netflix are sort of very unique in that, where they get paid for top-line growth. But 20 seconds here. When do you think the IPOs are going to come back?
I think in the next quarter or two.
Interesting stuff. All right, Bipul Sinha of Lightspeed Ventures, thank you very much. It's an interesting conversation with what's happening.
Thank you so much.
Changes out here in the world of technology.